we're in a situation in the markets where there's one big 800-pound gorilla that drives everything, and that is the war in Iran. And that's a very bad thing. And unfortunately, as hedge fund managers, we can't isolate ourselves from these types of situations. If I was a politician, if I was in the White House, if I was in Congress, that's what I would do. I would constantly start wars, because that's really when you matter, right? I mean, everybody's now following every possible word that comes out of the Trump administration and also the Netanyahu administration in Israel, because of course this war is a joint operation between Israel and the US. So if you want to be important, you start wars, and unfortunately that's why we have these types of wars. Now, for us investors, the purpose of Orange Capital Partners is to generate wealth by investing in fundamentally new concepts and engineering practices. So there's no, we don't want to change the geopolitical landscape. We don't want to, proliferate Israel. We don't want to, help build a global army, or that's just not part of our mission. And by definition, then we're kind of on the sideline now. We don't have much control over what's going on. And what that means is the question then comes up, okay, what do you do now on a daily basis, right? I mean, you don't follow the war in Iran. That's I think futile, because I'm going to discuss why that is futile. But the point is more important. It's like when you have macro events, sometimes they do matter and sometimes they don't. This is one of those that doesn't matter, in a sense that no matter what you do with your investment portfolio, you're not going to take advantage or avoid or mitigate the situation. The war in Iran is a very bad situation because there is no clear definition of what it means to win the war. There is no clear definition of what the goal is, and there's no clear definition of what happens afterwards. So these are the three main basic things you need to have clarified before you start an operation at this scale, right? And it hasn't been done neither by Israel nor by the US, and therefore it's doomed to fail. I think that's the prediction here. You can't predict war, of course, but what you can do, following our analysis, when we analyze things here at Orange Capital Partners, we follow what I call the Jeff Bezos playbook. The Jeff Bezos playbook is, in his early annual letters, he used to say, look, I can't predict the future, but what I can do is I can predict that people always want lower price, higher quality, more selection. And in that sense, I also want to analyze this, and I would say, look, I don't know what's going to happen, but I can tell you one thing: a war that has a clear purpose, that has a clear definition of what it means to win, and a clear definition of what needs to be done afterwards, has a very good chance of that's how you win wars, whether it's actual physical hot wars or cold wars, or even competition within, let's say, companies. If it's clear, it's like AI. Like if you have a clear eval, if you know what's right, what's wrong, if you know how to tackle that, then you will win. And in this case, that hasn't happened. I think even if you ask, let's say, Israel, which is the instigator of this war, what is the goal here? There is no clear goal for the Netanyahu administration, definitely not for the country of Israel, other than some platitude like, we need a revolution, we need a whole different setup in Iran. I mean, those are platitudes, because you can't get that. You can't destroy the whole country either. So the only thing that helps is an Orwellian perpetual war, where you keep yourself in power, you keep yourself important, and you also work to the detriment actually of the people in Israel, because of course this is not a good situation for them either. So if you look at it from every angle, from our angle here in the US, from the angle of Netanyahu, from any other person that is involved in this type of in this conflict, even the Iranians themselves, of course, have no incentive to keep this on, but they have, I don't know the situation there, but I would think that the regime has no interest in letting some sort of revolution happen, because that means they're going to get killed. So having said that, we're doomed uh, in this times. Like this is like the Iraq War. This is like Vietnam. This is exactly the same thing. The U.S. is doing the same thing again and again, which is fight purposeless wars on a pretext of some sort of global freedom or something, when in reality, the only reason I could think of is that the politicians want to stay relevant, and they also, of course, want to grift. So what that means for us here at Orange Capital Partners is the question, okay, what do we do now? Given that there's an unwinnable war, it's not like we can wait for the sport to win. And I think what we do, I'm going to get cut to the chase now, we just stick to the fundamentals. What is the business? What are these engineering practices that we're so excited about, and where's the wealth creation going to be? If the world gets back on its track, if the world de-wars itself, if somehow we get a resolution, we will generate the wealth. Right now we can't, but maybe at some point we can when this political situation is over. And if it's not over, then we will all sink together. And then the question is, how much leverage do we have? And not just the leverage in the fund, but also the cost structure, our living expenses, because we have to survive maybe a longer period of dire straits because of this war. That's kind of the situation I want to talk about this. It's not our podcast. It's March 26, 2026. This is Crim Delco. For the year, we are down 16%. The market is down 6%. We're underperforming by 10%. So let's talk about first the situation with the Iran war. Like I said in the prelude, the Iran war is unwinnable because there's no clear goal, there is no clear definition of what is a win, and there's no clear path to what happens afterwards. In a situation like that, you cannot win a hot war. That's impossible. So we predict that this war is not winnable, that it's going to drag on, that it's going to hurt Donald Trump politically, domestically. It's going to drive a left-wing or democratic left-wing landslide in the midterms, and then potentially even for the next presidential election and congressional election, because people have lost trust in the Trump administration. He ran on the ticket America first. This certainly is not America first. This is America last. It doesn't even serve Israel. It only serves the Netanyahu administration. Forget about the U.S. So this is really a very, very bad situation. Again, it's not winnable because there's no clear goals. There's no clear definition of what is a win. There's no purpose, and there's also no plan for afterwards. And if you have all these if these things are not in place, you cannot win a war. I don't have to be an expert in warfare to analyze this. So this is the situation as we see it. On top of that, Trump has also let us down on the budget. Although there we could say, okay, fine, look, we can kind of maybe survive the budget deficits because there is this potential of rapid economic growth because of infrastructure investment and AI. So maybe we can kind of mitigate that. But this war, of course, is a much bigger disappointment and a much bigger letdown for us Trump supporters. So having said that, now the question is, okay, what do we do as a fund? Okay, the purpose of this podcast is to give people a sense what it feels like to run a hedge fund. And we are trying to give people a sense, not educate them. This is not a how-to-do podcast. This is also not a self-improvement podcast or anything like that. It's just simply, look, if you're in the business, or if you're thinking of starting the business, maybe you're a grad school person and doing an MBA or an engineering master's, and you're thinking of running a fund, you want to just hear from us who are in the business how it feels, what's going on. And we're not talking too much about positions also because we don't change that much. We're invested in Tesla, we're invested in Nvidia, we're invested in Bitcoin. Those are our biggest positions. So it's not. This is not about trading. This is definitely not about tactical trading or any of that stuff. If you're interested in that, go somewhere else. This is not what we do. We're also absolutely not giving investment advice, nor are we allowed to do that. What we're trying to do is just give people a sense for how it feels like to run a fund, and this is how we feel. Like we're trying to just express, okay, look, today we wake up in the morning, the market's down 2%, and the Nasdaq, our stocks are down because there's something going on in Iran. We don't even know anymore what it is. Oil is up 40% year to date, and there's no purpose for this war. It's a bad situation, so we feel bad about this situation, right? And the question now is, what do we do? Like, how do we wake up in the morning? What do we even do as fund managers? Do we follow our portfolio companies? Do we invest in new companies? Where is the money going to be made? And the answer is, look, in a certain way, not much changes, right? Because fundamental new concepts and engineering practices, they transcend geopolitical issues and stuff like that. Of course, they don't if there's a nuclear third world war or something like that. But let's not go there. And by the way, actually, as I mentioned that as a caveat, the way we run Orange Capital Partners is we assume that the world will keep rolling roughly the same way it's been rolling, right? So the same political situation, no world wars, no big extreme conflicts, massive, killings or any of that stuff. We don't assume revolutions. We don't assume segregation in the U.S. So we have a lot of assumptions that maybe some people might be happy to counter and say, "Oh, you're crazy. There's going to be a war with Taiwan." Yeah, that's true, but we don't invest like that. Like, we don't spend resources trying to understand what's the probability of an invasion in Taiwan or things like that. And you see, the point is that doesn't mean we're right. That doesn't mean we're smarter than people who do that. It's just we don't want to spend resources on that front. We'd rather spend them somewhere else. For example, this morning, I spent an hour listening to a presentation by a Stanford professor, a robotics Stanford professor, who talks about how robots can enhance human action, for example, in surgery. In this particular case, they built a robot that can do underwater recovery of archaeological artifacts. So they build a robot that has haptic sensing, visual sensing, and he was talking about the engineering of a robot like that. So why do we do that? Of course, other than curiosity, and by the way, you always learn something in these types of presentations, even if you're not fully interested in robotics, but that's besides the point. What we're of course interested in is how the mechanics, the actuators, the forces, how does that work? Because that's going to be important for Optimus, which is a large project that we are invested in through Tesla. So why do we do that? Because we think that these types of new engineering practices and concepts, like a humanoid robot, for example, will enable massive new opportunities for companies that build those robots and also all the adjacent companies, and eventually also everybody else to generate wealth. And that's what we're invested in. That's what we're spending our time. You might say, well, who cares about that? The market's down 2% today. Why didn't you, worry about that? Well, because we don't trade, we're not day traders. We wouldn't even know, to be honest, what to do if we saw the headlines of tomorrow. If you told us tomorrow oil's down 5%, I would say, okay, fine. I know the market's going to be up, but that's about it. I don't know, whether somebody in Iran said something, or somebody in Israel said something, or somebody got killed, or somebody didn't get killed that is supposed to be killed. We don't know what the reactions of these things could be. So having said that, back to our fundamentals. So we follow the fundamentals. We are following meticulously the technology. For example, we spent some time thinking about hand design for robots. There's a group in Zurich, Polytech in Zurich. They built a hand, so we were thinking about that. So those are the kinds of things that we're working on actively. We read books, of course. We have a lot of book discussions on this podcast about that. That's more kind of yoga for the mind. It's not necessarily, these are not how-to books or classroom books or anything like that, where we learn how to make chips because, Musk wants to do a terafab. It's not like that. It's more the point being that we read the books as part of a general flexibility management, if you will, mind flexibility management. So fundamentals, what's the technology doing? We are invested in, what is the purpose of our investments, right? The purpose of our investments, the mission of Tesla is amazing abundance for everybody. What Musk is trying to build is a fully integrated energy company that has an end market, which is artificial intelligence. So energy company is sort of the muscle, and the application of that energy is going to be in intelligence. Intelligence as defined as the computational part of achieving goals in the real world. Those goals can be help somebody with surgery, drive somebody around, clean somebody's apartment, work as an underwater welder in an oil rig, and so forth. Work um, as a um, as a welder in, or maybe not welder, but work as a mechanic in space, fixing troubled space AI data centers. In other words, Optimus will be deployed in space, of course. So that's the goal, and in order to achieve that goal, you need a fully integrated supply chain for the AI, and it starts with energy. I saw yesterday an interesting post by, I think it was Sean McGuire, but I could be wrong, and he said there's a Copernican shift in Silicon Valley where everybody's believing that Silicon Valley is the center of the world. And now it turns out that actually, no, Silicon Valley is circling around like everybody else around the sun, and the sun being energy, literally, not intended or intended, I don't know. Like energy is the key. So even for AI, even for software, energy is becoming absolutely crucial. I kind of agree with that. We at Orange Capital Partners have always consider ourselves actually first and foremost as energy investors. And for a while, we were actually even invested in oil companies and all that. But then we realized fundamentally we jumped on the Musk bandwagon, which is energy from the sun through solar is the most efficient and most wealth creating way. And now, of course, with the Terrafab announcement, that is becoming reality. So having said that, now back to what we do here at Orange Capital Partners is we follow the world of energy, particularly, again, solar power. So, for example, we look at possibilities of optical networking in space for AI data centers to communicate with each other. So that's a technology that's going to be needed for AI data centers. We look at radiation technology. We look at propulsion technology in space. We look at AI models. We look at robotics. We look at self-driving technology. So we look at the energy harvesting on Earth and also in space. We look at the way this energy can be used in AI. Because what is AI really? What is intelligence? It's computation. What is computation? Computation is finding shortcuts to solving problems and using math to do that, which is instead of try and error randomly for a long time, you can use math and through math use computation to shortcut that try and error to maybe more efficiently try certain things and then find better solutions for problems. That's what AI in essence does. That's what humans do. We do experiments in the lab, and then we try this, we try that, and then eventually if something works, we write a paper, and that's knowledge. So that's the same thing that happens at scale in a digital data center, and that's what we call AI training and inferences, then using that knowledge to actually pursue goals. So this is really what we do. I mean, again, come back to the initial questions. What do you do in times when the headlines are full of, this war and that war and this and that? You focus on your mission, the mission that you as a fund have subscribed to, and then hopefully you've invested accordingly. So there's an alignment between your mission and the companies that you're invested in, and I hope we have that. We have also very few investments to make sure that that alignment is more, given this is a side note, but the more diversified you are, the less aligned you are with your mission, and the less of a purpose you have, the less of a mission you have, and the more you're just a coupon collector like most other funds. So that's part of the reason why we're very concentrated. So that's what we do. We follow the technology. We define the pain points or the opportunities along the value chain. Now, given in our case, given the portfolio companies that we chose to invest in, they're really fully integrated, not across the board, particularly Nvidia is not fully integrated, Tesla is. So there's really a lot of different vectors we can look at and find ways to educate ourselves, and then also find ways to understand where is this going, and how are we going to be able to generate wealth? Because eventually our job is to hopefully, we spoke about this a while ago, our degree of freedom is only one, which is we choose the investment. Hopefully we will never have to exit the investment. So in that sense, we're very Buffettian, more Buffettian, which is we actually want to stay invested as long as we can. But sometimes you're wrong, and that's part of the reason why we do all this work, to make sure we're aligned. The alignment is important. It's not whether we're right or wrong. As long as we're aligned, it's fine. We can change our mission, right? We can become a risk off fund or something, but as long as we have this mission, we should be aligned with the mission, and that's very important. Now, last thing I want to say today is about the other side of the situation, which is what if things go really wrong, right? We have a drawdown of 70-80%. The question then is the leverage. The question is, and leverage is not just the leverage you have in the fund. We have about 15% leverage right now, which is roughly in line with where we want to be, particularly in times like this. So that's fine. But we also have to consider our cost of living. We have to consider our cost of operations, because you have, as a fund, of course, the leverage is not just the money you borrow to invest. It's also the money you need to run and operate. And you don't want to be in a situation where you have to sell assets to fund your operation or your lifestyle. And that's very, very important. I think a lot of people underestimate that. A lot of people get in trouble because they underestimate particular lifestyles. So they think the lifestyle is a given, and then you kind of just go to work, and that's sort of some hypothetical thing. Well, if you run your own fund, if you eat what you catch, that's not the case. There's nobody paying your salary. You actually have to make sure you have enough money to sustain your lifestyle. If you don't, make sure, if there's a risk, you don't want to be in a situation where you run out of money, or where you need money in a bad time, when, people like Trump or Netanyahu screw up the world, and then you have this bad situation that you have to sell into. You want to be a liquidity provider if you can, and not a liquidity consumer. That's never a good situation. So to summarize, in times like this, when there's a war, define why this macro situation is happening. We, I think, have a few theories about that, but that's not so important. What's important is we have classified this Iran war as unwinnable. It's a bad situation, so we're prepared for the volatility. We're not surprised by it. We're managing our leverage, our cost of capital, our cost of living, and all of that accordingly, assuming it's going to be a mess. Excuse my French, a shit show, because again, it's not winnable. There's no clear definition of what is a win, no purpose, and no plan for after the win. So therefore, it's not going to be winnable. Why it's happening is anybody's guess. It's not that important right now. I think what matters is we stay focused on the actual business, on the actual fundamentals of the business, and the opportunities for wealth creation, because that's fundamentally what we're here for. Thank you.